beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index down 0.5%. Hang Seng is trading with cuts of 1.3% in trade.
They're on hold, as you say, awaiting clarity on the outlook for inflation and new policies.
23,050 is the high that we saw yesterday.
Inflation, the depreciation of the rupee and geopolitical uncertainty. So multiple headwinds that Siam has cited.
It's feeding a shopping mission of I want it here, I want it now. And it does therefore removes the barrier to consumption. So
About 100 points lower on the Nifty, 22,840.
Partly we have increased the prices and partly the deallocation has been restored back to the normalcy.
But there is risk that there will be a rise in tariff on India before the trade agreement can be signed.
Nifty is at that 22,900 mark, but mid-caps have perked up in trade.
Operating profits for the banking sector declined the highest in last 5 quarters.
The point with the issue is that we're not saying there's a shortage of gold in the market.
Grand ceremony in Delhi's Ramleela Maidan. She is the first BJP CM of Delhi since 1998.
Similar script playing out at least for the benchmark indices. You're holding on to 22,800 on the index, but the broader markets are the story of the afternoon.
Well, that's the day so far, and I have to say, like yesterday, it is a better day and relatively, wider, broader market looking a lot better compared to what we've had over the last many weeks now. Well, the Nifty is not doing very much like yesterday, like maybe the day before yesterday. Broader markets, about 2:1, 3:1 nearly advanced decline ratio, and that tells you that small caps, mid caps, there is buying in individual names out there. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surbhi. Surbhi, hi.
Hi, Prashant. And I can take small pleasure out of the small things of life by saying that today India has outperformed at least Asia. We haven't used that phrase in such a long time, right? Because some of the regional markets have fallen quite a bit. There's been profit-taking in Japan and Hong Kong and mainland China as well. So compared to that, we are flat, but flat is better than down. And the broader market is doing really well. Second day running.
When you started saying simple pleasure in life, I thought you were going to say it's a Friday. I thought, well, it's a Friday.
No.
All of that went through my head in that short span of 2 seconds.
For that, we have to wait another couple of hours.
All right. Well, you got the market, which is absolutely, flat on the Nifty, that is. But that is the Nifty. And it's okay if the Nifty is not doing anything, because if you pull up the mid and the small cap indices, there is activity, there is action there, and we'll talk about many of these names, individual names which are moving up. So 1% in the mid cap index, small cap index 1.5%, and in the small cap, so after yesterday's nearly 2% move, we're up another 1.5%. Of course, we started the week on a pretty poor note. Monday was down, Tuesday was down, but last 2 days. It's been better. So some recovery, and I think, we should be flat, if not slightly higher for the week so far. That is, last Friday is close to where we are now. And as I said, market breadth is looking slightly better as well. There is action in large caps. Names like Mahindra, maybe we can pull up. In the morning, it was down about, that's actually maybe the most meaningful recovery in large caps in terms of a single name. 2.5% lower earlier, it's up 2% the last I checked. Actually 3% now. So there's a 5% recovery from the day's low in Mahindra. And that's notable because in the last 5 days, it had given up about 15% gains. 17 if you sort of take the price point at today's low. So we'll see. There is an interesting story which we're going to put out with Parikshit in a bit from now. But that's just coming up. But as I said, individual stocks being bid up, and there are buyers which are emerging. It was a buyer's strike that disappeared, but they've been back, at least for some of the names, over the last 2 days. Surbhi.
On M&M, Prashant, on a lighter note, M&M, we know it's known for its SUVs, right? Yeah. Now, if you're thinking of buying a Tesla, forget the pricing, whether it's a couple of lakhs more than an M&M, SUV. Where are the roads? Good luck to people who are going to try driving Tesla on Mumbai roads, especially. That's where the SUVs work, whether it's Mahindra or any other, auto company.
Yeah, where are the roads and where are the flyovers and where are the? Everything is dug up, right?
Air taxi, one of those flying cars.
Did you see that story, by the way? I think it was in Mahabaleshwar or something. There's one young boy wanted to take an exam. His exam center was across 2 hills.
He took
he paraglided. I think somebody was saying that's
that's what maybe Mumbai needs as well. You never know. But anyway, we can go on and on. Mumbai infrastructure is always a delightful topic. But very quickly, to talk about this broader market recovery. So what's working? One theme that's doing well today is PSU. The Nifty PSU Bank Index, the PSE Index, the CPSE Index, all these indices are up and about. And you can see that reflect in the kind of stocks. NHPC, in terms of the volume charts, there are stocks like SJVN. There are quite a few banking names like PNB, Nalco, BHEL. So industrials, metals, banks, doesn't matter. Across the board, PSUs are seeing buying second day running. That's theme number 1. Theme number 2 is buying in a lot of these beaten down names, including some pharma names as well. And Piramal could be a good example. Piramal Pharma is up about 11% this afternoon. It has some other stocks for company as well, but Piramal's gain is the sharpest, might I say. Then there are other interesting high flyers like Radico Khaitan, good comeback, 7.5%. Amara Raja about 9% higher. There's Thomas Cook, there's Voltamp Transformers, there's Tata Power, quite a few, by the way, industrial stocks, even non-PSU industrial stocks. KEI I saw last. Many of them are finding takers again. So let's see. We'll discuss some of these themes with our guests as we go along in the show today. So let's get started. We've got, of course, Mitesh joining in. First, let's get the trading strategies going for the last hour. Mitesh, good afternoon. So second day running, index is still undecided, but mid caps are, are really moving around. What are your trades now?
Good afternoon, Subi. I think, that's a very tricky or a typical situation when a lot of stocks are showing signs of reversal from the oversold levels, but the index is yet to fire any kind of a decisive signal on the upside. So, you're always worried, whether you should go long or not, but we'll take some long position because a lot of stocks are showing positive traction. So I have a buy on Cummins with a stop at about 27.80 for targets of 2900 and then 29.30. And also buy on Federal Bank. You were mentioning some PSU banks. I think even Federal Bank, not a PSU bank is looking good in the short term. It's made a good base around this 180 mark. So keep a stop just below that. Look for a target of 192, 193.
Okay. All right, Mitesh, got it. Thank you very much. We'll come back to you in a bit to get some more strategies and trades going. Moving on, let's, get a little stock specific. Credit Access is one of the names on our radar today. Goldman Sachs has come out with a note on it. It's a pretty interesting one. Let's go across to Abhishek to figure out what the highlights are. Abhishek.
Well, Goldman Sachs has written on Credit. They have a sell rating target price of about 600 per share. They said that there will be moral hazard which will play out in the state of Karnataka. With respect to collection efficiency, they say that has dipped in the month of February for the company. So as per their industry interactions that they have had, the collection efficiency has declined to anywhere between 87% to 95% range. And just to alert our viewers, anything below 98% collection efficiency is a danger sign with respect to MFI collections. So this is post-implementation of an ordinance that banned unregulated activities in the state of Karnataka. So Credit is the most exposed player in the Karnataka state. Pre-tax profit, the impact would be around 15% to 27% for the incremental loss rates that they have over there, and in the range of 2 to 5% of the Karnataka MFI portfolio that they have. So Credit has the highest market share in the state of Karnataka, about 19% in the state, which forms about 31% of their overall AUM. So they expect the ROA of the entity to be at around 2.1% and 2.6% for FY25 and 26 versus the management guidance of about 2.3 to 2.4% for FY25 and about 4.2 to 4.5% for FY26. So they are 34% below consensus estimate for FY26 EPS. So valuations right now, they say, don't reflect the true underlying stress that is there in the portfolio. Back to you.
Okay. All right. Got it. Thanks very much for that. That's a view coming in on Credit Access Grameen. We've got Gurmeet Chadda joining us on the show this afternoon. Gurmeet, great to have you. Thanks for joining in. So first and foremost, do you think this is the real deal, this mid-cap recovery? 2 days, and I don't want to, they say don't count the chicken before they hatch. So I don't know. Do you think that the worst of the mid-cap decline is over? And if yes, what's the approach that you're taking? Have you started nibbling in?
Hi, Surbi. Always a pleasure. I think we should wait. I think few days, couple of sessions. I think the advanced decline ratio is encouraging. Also, if you see the net sell number, also is relatively lesser. And should be a lot of this is also arithmetic. So if you have 10-year US at 4.5 and you build in 3%, let's say currency, that makes it 7.5. You need minimum 7.5 in rupee to offset 10-year US at 4.5, and then you add a bit of a risk premium which you want from emerging market equity. So I think at some point of time, a lot of this arbitrage and the hedge money, if it gets a 12% kind of a visibility on India in the near term, this number could reverse. So I think for the time being, just track the US 10-year bond in my view. If it substantially comes down, the dollar index has stabilized a bit, which I think is good news. If you can see a little softening of bond yields, maybe 20-30 basis points, I think then I'll be a little more confident. Till such time, I think be selective. Wherever you have seen price correction and the valuations are more reasonable, if you're getting a 20% growth at about 20 times, I think that's the time to nibble rather than just taking a basket view of adding small caps or big caps.
Gurmeet, hi, afternoon. These tariffs will come into effect starting April, right? In some shape or form. That will put upward pressure on yields, I'm assuming, in the US. So it's the direction of travel seems to be up rather than down. Would you agree?
Yeah, I think optically, yes, Prashant, provided all tariffs, what he's saying goes through. I mean, I've always maintained that tariffs are not the end goal. Tariffs are the mean to get favorable, trades for US. And I think it's going to remain like that. And I think you will see more and more bilateral agreements. So all that world of US being the big brother watching over everyone, and I think that's over. So you've got to figure out how to deal with the new administration. My sense is from US also can't sustain 4.5 kind of a yield for very long at $36-37 trillion debt. So something will happen. Either even the US economy otherwise will go through a very rough phase, because the dodge also will create some kind of a slowdown. If you remove system excesses, cut down few wasteful things, it does have an impact on softening of growth as well. So my sense is that you will see incrementally, and a lot of the negatives are in the price. Even if you see on the bond yields, the markets are expecting some impact. That's where it's still at 4.5 while Fed has cut rates. So some of it is in the price, and that's why I'm saying it's very important that the yields soften for a more durable and sustainable recovery.
Never know with the dodge, who's dodging whom, because he woke up to the news that part of whatever they save on these, cutting the excesses, Mr. Musk is saying we'll give it back to the US taxpayer. So I don't know if that becomes a different way of boosting the economy. Who knows? But these things are just moving way too fast. Gurmeet, just give us a couple of minutes. We'll come back to you with some more specific questions as well. There's an interesting story that our colleague Parikshit is picking up. And this is, of course, from a very, very hot area, which is manufacturing of electric vehicles. We're learning from sources that the central government will be inviting applications for electric car manufacturing scheme, and this could happen by April this year. Let's go across to Parikshit to understand the contours of the scheme. Parikshit?
The reason why this development is important, because last year in the month of March, the Ministry of Heavy Industries had launched a scheme for promotion of manufacturing electric cars in India. This would give a concessional import duty of 15% for global EV OEMs to import cars, at least 8,000 electric cars per year at 15% duty, as opposed to 70%, only if they commit $500 million towards manufacturing in India. Now, the scheme is in the final stages of guidelines being issued. The scheme itself was notified, but the guidelines are yet to be notified. Now, this process is going to be completed very soon, and the scheme will be open for applications in the month of March, maybe late March or early April. Now, this was a scheme designed for companies like Tesla, like VinFast. So let's see whether Tesla actually applies for that or not. But what we are told that companies can spend 5% of their committed investment on charging infrastructure. Expenditure on design shall include expenditure on in-house and captain engineering, R&D on eligible product. And one of the important criteria is this, that the company must achieve a minimum revenue of rupees 7,500 crores by the 5th year of operations and 5,000 crore by the 4th year of operations. An applicant can also be fined in case it fails to meet the revenue criteria, and the fine can be in the range of 1 to 3% of the revenue shortfall. There will also be an interministerial sanctioning committee which will monitor the approval and the implementation of the scheme. We must tell our viewers that Tesla has not participated in any recent stakeholder consultation with regard to this scheme. There was a lot of interest 1.5 years earlier, but in the last few months, they've not attended any meeting. But at the same time, because this scheme is yet to be opened up for applications, the government remains hopeful that Tesla will apply. We should also tell our viewers that if you look at the different scenarios, this scheme applies to a CIF value of $35,000 US. Now, this means a cost insurance freight value of $35,000 US for a car which lands on India's shores. This would be around 29 lakhs in Indian rupees. If you buy this at 70% duty, the cost of this car would be around 53 lakh rupees. If you buy it as a result of this scheme, the cost to the customer would be around 35 lakhs 92,000 rupees. So there is a huge difference, a huge cost advantage that a company would get if it gets this duty concession by applying for this scheme. So it is very attractive, but let's see if it fits into Elon Musk's scheme of things and whether other global OEMs will also be interested.
He's got the President of the United States of America batting for him, saying, what is this? You know, you're telling Elon has to put up a manufacturing plant in India if he has to bring his cars in India. Very unfair. So I don't think the last word has been said on this. But very quickly, Parikshit, you mentioned, I think, the number of cars. If you subscribe to all the manufacturing criteria, then at 15% duty, how many cars can you bring in India? I think you mentioned a number.
It's about 8,000 cars. Yes,
8,000
cars per year.
Okay.
At 15% duty. In case there is a shortfall in year 1 or year 2, you can carry it over for the next year. But the criteria is this: you must start manufacturing by the 3rd year of operations. You must reach a revenue of 5,000 crores by the 4th year, 7,500 crores by year 5. You must have domestic value addition as well, and domestic value addition will be 25% domestic value addition in 3 years, 50% in 5 years. So there are strict localization guidelines and penalties also if you don't meet the revenue threshold.
I guess that's why Mr. Trump is not too happy. I mean, I'm sure he's not getting into the details of this scheme, but I'm sure these are the exact parlays that are going on to see if they really, suit both sides or not. Thanks very much for that, Parikshit.
So if they sell 8,000 cars at the rate that Parikshit said, it's essentially sales value of about 2,900 crores.
2,900.
1 year, 8,000 cars.
That's how much you can make if you sell those 8,000 cars at the lower duty.
Yeah, at 15%
duty.
At 15% duty,
yeah.
So that car cost is about 35 lakh 90. So assume 36 lakhs. So at 36 lakhs, at 8,000 cars, it's about 2,900 odd crore rupees.
Yeah.
I mean, the revenue kind of potential. But it's interesting that it's moving so fast, right? And of course, being pushed along in that sense, I'm sure that's obviously on the minds of officials, government officials, etc., who are designing this, and we'll see. But this is a very, very interesting story which Parikshit is getting to us. Gurmeet, any thoughts? You heard Parikshit, the details, the design of the scheme, but from a listed universe perspective here, Tata Motors, Mahindra, etc., what's the sense?
No, I think it's a very welcome move, Prashant. And if you see the success of BYD, it started as a battery maker for mobile phones in 90s, then pivoted to auto, and then eventually became, the largest best-selling EV vehicle now. And another reason for China's success has been the way they have built the EV ecosystem. Look at CATL. We all know BYD, but CATL is now the largest, lithium-ion phosphate battery maker in the world. And BYD also figured out how to vertically integrate, which reduces your component dependence in sourcing. So I think it's just the right thing to do right now. We have to first create the ecosystem. And India, in my opinion, I've always maintained, look at the top 10 selling cars, Prashant. Only 2 are above 20 lakhs, which is Creta and Mahindra Scorpio. Cars which do more than roughly about 1.5 to 2 lakh units a year. right? So I think the pricing point in India is very different from other countries and considering our per capita income. So I think India will have multiple powertrains, but yes, the adoption of hybrid and EV will keep picking up. We are currently doing about 1 lakh cars out of 40 lakh cars we do. I think it will gradually move, but it's a welcome move in the long run. So I don't see much threat to M&M or Tata Motors and all this narrative of Tesla coming and disrupting everything.
I guess the market's hearing that view and understanding that view today, Gurmeet, because we're seeing that recovery play out on the Mahindra & Mahindra stock. It was battered quite badly. I think first knee-jerk reaction was, oh my God, I mean, Tesla is disrupting everything. But now people are taking that nuanced call that you just pointed out. Let's move on to another space. Industrials as a theme, like I said, has been doing quite well today. Let's pull up some of these stocks. Cummins is one that immediately comes to mind. Look at JSW Infra, JSW Energy, quite a few of these names. And on the PSU side, there is SJVN, NHPC, there's ABB, there's NTPC. Let's get the stocks going up on the screen as well. All of them are up anywhere between 3% to 5-6%. So power and industrials as a complex is doing really well in this broader market recovery that we're seeing on the screen today. What's your sense, Gurmeet? Now, these are the original leaders of the rally, many of these stocks, right? But that's why you get very nervous whether after this fall, should you go back to the original leaders or could this be just a trap? What's your sense?
I think you still have to be careful of valuations. I think one part of the portfolio has to go more towards consumption and maybe financials in the near term, considering that flows may go there. And I think barring Cummins, which is about, let's say, 30 odd times, and on EV and EBITDA also reasonable, most of the names, ABB, Siemens, are still not cheap despite the fall. One subspace in this is power transmission. So I think one is the acute shortage of transformers. So if you look at commentary globally also, and from companies like Transformer and Rectifiers India, I think that's one space which will continue to do well. I think some of the PSUs look very attractive. Something like a Power Grid, slightly softer quarter, but order book continues to grow 15 times on a trailing basis, 12-13 times forward, 4-5% dividend yield. So you got to do a little bit of value hunting here, and maybe a touch PSUs probably on valuations and in this kind of a market make more sense until the broader sentiment changes. So I would be more keen on the power transmission and maybe a couple of PSUs here rather than still chasing the multinational ones, which still are very richly valued.
Which one here specifically, Gurmeet? You mentioned the name.
We like Power Grid, Prashant. We also have a very niche transformer player called Hind Rectifier, which is more for locomotives. It's a small cap company, and we are also reviewing other names like transformers and rectifiers, etc. Cummins, maybe from it's reasonable. I would not say cheap, but further correction then probably will be more comfortable adding.
No interest in Voltamp and CG and the likes. CG is still at, let's just look at valuations. FY27 still at about 56 times earnings.
Yeah, and when you run a portfolio, you have to let go of some. Sometimes you can't have, you can have 2 or 3 in a particular theme. So sometimes you have to let go. But I think CG Power has been a phenomenal wealth creator. No to do about.
92,000 crore market cap now. I mean, of course, at its highs, it reached about 110,000 or something. Well, Voltamp is the other one, which is up 14%. I mean, of course, that has also come off it's come off, I think, 30% or so from the highs. But so have names like Hitachi, etc. Well, Gurmeet, thank you very much for joining us. Good chat as always. Thank you for your time. We'll take a break here. Rajesh Bhatia on the other side. We continue the chat. Stay with us.
Very good. One of those massive roaches there.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge. So it's our fourth biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million right now. So
Breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
we've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
Welcome back. You're with us on Closing Bell, and our next guest is Rajesh Bhatia, CIO of ITI AMC. Rajesh, great to have you on the show. Thank you very much for joining in. Let me ask with a simple, basic question. Is the worst over for this market?
Well, I wish so, but I think not. I think I'm feeling a lot better though, given how the markets have corrected, especially the mid cap and small cap. The last time we spoke, I said curb your enthusiasm in the markets. And of course, I think the reset that has taken place, particularly in the mid cap and small cap, is making me feel a lot better as far as company valuations are concerned. At least there is some sanity, if not all sanity. It's also healthy that I think, the expectations of investors have just gone through the roof as to what they should be getting from Indian equities. I think that is also kind of moderating, and there is greater sanity in terms of expectations. So all of that, what is happening is very healthy. Having said that, I think the challenge for India is that while the large cap has become reasonably priced, the mid cap and small cap is still at an elevated level. you can have that elevated level if you have greater visibility of growth. There is unfortunately a slowdown that is taking place in India. You can see that with power consumption, which is only up 3 or 4% a year. We were talking to an industrial company, and they were saying that the demand for motors has come off, which is reflective of industrial demand in the last 3 quarters. So a lot, passenger vehicle data, which is again suggesting, very anemic growth. So there is a slowdown in the economy that is happening. And unfortunately, the global picture is also very uncertain. With the tariffs, etc., we don't know whether is it going to cause a recession or is it going to cause inflation. So again, that is a very uncertain environment, that we have just walked into. Given that context, I would want probably better margin of safety as far as mid-cap and small caps are concerned. But in all, I think it's healthy that the markets are correcting, and it's at least giving us greater sanity as far as valuations are concerned.
Rajesh, hi, good afternoon. Which means, would you, if someone created cash, should they buy select mid-caps and small caps?
Yeah, I would say that, there are some pockets, I wouldn't say a lot, but some pockets which are emerging, which is reasonably priced. Again, I'm not saying that they're extremely compelling, but from a medium term perspective, look, the Indian macros are not damaged. I mean, we have still a very responsible fiscal deficit. We have still a very responsible Reserve Bank of India, which has...
But what kind of sectors, Rajesh? What kind of sectors?
So I would say, power transmission, etc., still are, a good places to go to. Of course, I would say in the mid caps, of course, large cap banks are very attractive, which everybody would tell you. Life insurance is attractive, telecom is attractive. All of that is in the large cap. But even in mid cap, my sense is there are places like private banks in the mid caps which are looking attractive. So there are pockets that you can find within that space which are now reasonably priced.
With full disclosure, Rajesh, you want to share a few things you've done? You guys, your team at ITI has done over the last
my compliance would kill me. Prashant, my compliance would kill me if I took any names.
You can blame me for it.
So no, but I think to be fair, that we are finding some value and we are kind of putting money to kind of work, and which is encouraging, right? But yet, I mean, from a bigger picture, I do remain concerned that this doesn't seem like, even if there's a bounce, this doesn't seem like a V-shaped bounce, because there's just so much uncertainty on the domestic as well as the global front. At best, even if the turnaround comes, it will be probably a U-shaped kind of recovery.
The other thing, Rajesh, which I think Gurmeet was also, by the way, Gurmeet also said power and power transmission earlier, but he also was talking about the US 10-year. So how much of an impact do you think this will have? Gurmeet was talking about through the lens of the 10-year, and it should come off because it's essentially you got to add some currency risk, some risk premium, etc. So the return hurdle becomes larger for foreigners. He was talking about that, but add to that this tariff bit. Do you think it'll hurt or it'll keep flows away? In what sense, to your mind, Rajesh?
Okay, let's look at the positives, right? The positive is that in spite of all the talk that Trump has been making, it seems like he wants to front load everything. He wants to get all the action items you want to kind of get it done in the next 3-4 months. So he's kind of front loading every single thing, whether it's geopolitical or economics, right? But in spite of that, the dollar hasn't moved significantly. The 10-year yield has actually been quite benign, because it should have meant even more volatility as you move forward, given the kind of design that he has. But it's been remarkably stable, because if you put tariffs all across, reciprocal tariffs, somebody has to bet on inflation. Somebody has to bet on global slowdown. I think there is already talk that if you have this kind of uncertainty, capital expenditure from the private sector is going to slow down. Consumption is going to slow down globally. And who's the global champion who's going to lead the global economy if US also starts to suffer? So see, on the positive side, despite that narrative, these economic variables are stable. On the negative side, there's very little scope for the Fed to reduce interest rates. So interest rates in America are going to really, remain kind of strong. And the dollar, therefore, will continue to be strong because, in case the world is looking at an uncertain future, people are going to migrate to the dollar. which brings to Gurmeet's point that, if you're an FI, the interest rate, the risk-free interest rates in America are very, very attractive. You come to India, there's a hurdle rate in terms of covering your currency cost, which is about 2.5% at this moment. And then you're expecting a return from India. But by the way, you are negative on emerging markets. So there's very little reason for FIs to kind of come to India, and the incessant selling that we are seeing from FIs probably could continue. So that's the negative aspect as far as we are concerned.
Okay, just hold that thought, Rajesh. Since you mentioned power and power transmission, we want to sort of come back and I want to drill a little deeper into that theme. Give us a second, because our colleague Vivek has been looking at a couple of interesting brokerage notes that have come in on stocks like NHPC and Tata Power, and both these stocks are actually up as well today. Vivek, tell us, I think one is CLSA, which is the other brokerage, and what are they saying on these stocks?
Well, that's right. So NHPC, interesting report coming in from CLSA that we highlighted in the morning. What they've done is they've upgraded the stock from what was earlier an outperform rating to now what is essentially a high conviction outperform rating. Although they've trimmed the target price by 3 rupees to go ahead and account for a higher capex and on the back of cost overruns. What they're saying is that the recent 25% stock correction gives investors an opportunity to go ahead and accumulate an inexpensive utility at 12 times FY27 price to earnings. What are the key catalysts according to CLSA? First up is the start of the Parvati 2 hydro project, which is expected in March 2025. Company's entry into shorter duration regulated pump storage, and also the rise in ROEs that is expected after the CRC ruling, and slew of new project awards to NHPC, according to CLSA, are re-rating candidates. Remember, NHPC currently has 15% of India's total hydro capacity, but 67% of the total under construction hydro capacity. So thereby, any change, improvement as far as India's hydropower generation is concerned, NHPC stands to benefit significantly. The other stock on the radar is HSBC. HSBC upgraded Tata Power today, mainly on the back of now compelling valuations. They believe that the recent stock price fall was largely on account of factors that were beyond the company's control. Some of the weakness reasons that HSBC have indicated are: number one, power demand weakness. Along with that, power purchase signing agreements have been delayed significantly. Also, privatization of discoms, something that the street was anticipating, has also been quite slow to pick up, especially in states like Uttar Pradesh and Rajasthan, where the company has interest. Overall, on the back of the steep price correction, and also HSBC likes the company's entry into cell as well as module manufacturing. They're seeing margins over 17%, and on the back of that, they're positive as far as Tata Power is concerned.
Okay. All right, got it, Vivek. Thanks very much for that. So, Rajesh, just to quickly go back to this before we let you go, you said power and power transmission. When you say power, do you mean traditional large generators like, Tata Power, or are you talking about more about the renewable opportunities that are out there in the market now with several companies like Wari getting listed? Again, if you could be a little more specific, is it the overall space one can buy, or, what exactly do you look for here?
So there is an energy. The big picture is that there is going to be an energy transition, right? And the renewables have to will be the growth sector, because that still has to be added at a much, much faster pace. And anything that supports that activity is, I don't have so much a view on the equipment suppliers, but definitely the guys who are in the IPP business or the transmission and distribution equipment, or, facilitating that activity is concerned, all of that look far more visible in terms of growth opportunity as you move forward. So if you'll allow me, there's just one more thing I would want to talk about, which you guys asked about the global macro. Look, the US has Scott Bessent as the Treasury Secretary. He was a hedge fund manager earlier, right? So he understands a lot about global macro stability. He has already pointed out, I want the 10-year Treasury not to go in either direction in any significant way. Right? He wants to basically make sure that that's stable and under control. Now, if you have that, which means a lot of this rhetoric of Trump, I would like to bet, is going to die down sooner or later, because he can't move to extreme decisions, because that will definitely impact financial stability of even United States, if not other countries. So my sense is that given that people like Scott Bessent exist in that system, means that I think the scope for doing wild things is certainly reduced.
Well, Mr. Trump is only saying, I'm not doing anything wild. I'm just reciprocating. It's reciprocal tariffs, right? And he's saying it's only fair. And he's given us an idea of what he wants to do. So we'll see if he sticks to that. But, you know, the thing is, we don't know exactly. And I think we'll play out some sound bites. We had people like Samiran Chakrabarti of Citi, Chetan Iyer of Morgan Stanley, who've looked at some of this stuff in detail in terms of implications for an economy like India. But that's a little later. Rajesh, thank you very much for joining us. Good to speak with you. We'll take a quick commercial break here. We're going to come back, dealing room, and focus on D Street Charter. Nimesh will tell us what's happening, what he's picking up, stocks in focus. And of course, we'll get you some trades as well after that. Okay, welcome back. We've got the market, which is flattish on the Nifty, but broader markets doing much better. Mitesh is back with us. Mitesh, I guess trades are all in specific stocks, but a quick view on the index first, and then what would you do?
Prashant, I've been maintaining this that a lot of stocks are at least showing signs of reversal, but the index has been typically extremely flat. I mean, look at the range, hourly candles, they're all tiny candles, not much of movement happening over there, both in the Nifty as well as the Bank Nifty. So avoid the index, I think, for the time being. On the stock side, I think I have STBT on Nika. It's trading near the day's low. So STBT here stop at about 167 for targets of 162. And ONGC is on the buying side, BTST here. Keep the stop below levels of 239.5 and look for targets of 245 to 46 for tomorrow.
Okay, Piramal Pharma is a big mover today. Have you looked at this one? Actually, let me just throw a few names and you can maybe pull one after the other. So Piramal Pharma is one, if you can just look at it. SW Solar, which is just had a one-way complete decline. So go on, Piramal Pharma first.
Piramal Pharma has had a good bounce back. 225, 230 is an important moving average level, and then we have got 245 coming up. I think it's got this trend till 245, but maybe bite on a dip. I think you've had 2 days of rally from 185 to about 225, around 210, 207, good range to get into this one with a 7-8 point kind of a stop loss, and look for a 245 kind of a target. What is interesting me with the most out of these names is NetWeb. I think, the stock is open with a gap up and typically giving you a gap reversal kind of a signal. The first target should be around 1800, so it gives you another 10% upside from here. And once we cross 1800, good chance that the stock can head towards 2000 as well. So very, very positive chart formation over here. And the third stock was SW Solar, which also has corrected a lot, reversing from oversold levels. I think this stock can also give you a bounce back, and the possible targets are 310 to about 310 to about 312, and then 330 on the upside. Beyond 330, a significant trend change will happen, but I'm not sure of that as of now. So just looking at 310 as the first target, and then 330.
Okay. All right, got that. Thank you very much, Mitesh, for the trading call through the day today. We'll catch up with you again tomorrow morning. You have a good rest of the day. With that, let's head across to Nimesh and figure out what the chatter has been like today. Nimesh, the day is very similar to yesterday, right? Almost mirror images, index flat, but mid-caps, lots of action. What are you picking up?
Absolutely, that's been the story for the last few days, Surbhi, that there is a bit of outperformance in the broader market, and it's backed by FI buying. In fact, for the last few days, I've been saying that even when the broader markets were down, there was selective buying happening from larger institutions, so that trend continues. But again, the feedback is while the mid-cap index have pulled back very sharply, there is still the retail supply which is there, and there is a bit of selling still going on from retail investors and HN investors in the broader market stocks. So that's the broader markets for you. The breadth is still positive, and that I said is again backed by very good institutional buying support. But the clear surprise index of the day is the PSU index. The index is up 2.5%. A lot of individual names are buzzing into it, and why I'm saying it's surprising, because for the last many days there is a feedback that there is selling supply in the PSU stocks selectively, but there was selling from the larger institutions. So in that context, today's up move of 2.5% is a bit surprising, and looks like there is a bit of shortcoming element as well in the PSU rally in today's market. I guess from here on, one technical support of 22,800 is an important level to watch, but also there is a FTSE rebalancing tomorrow, so some individual names will get impacted because of that. But I guess clearly there seems to be a bit of buying interest back in the broader market from larger institutions, and that's helping that indices to outperform in the last couple of days.
Okay, all right. So that's the overall feedback. So some selling broader market still there from retail, HNI, etc., as Nimesh is pointing out. But in terms of individual names, Nimesh, what's on your list?
So the first name, Prashant, is Shriram Finance. Within the financial basket, this is one name which is very aggressively bid by the institutional investors today, and hence you're seeing a big reaction on the stock as well. It's up for 400% and on large volumes as well. So that's the first stock buzzing on back of very aggressive buying. The second stock is Linde. Surprisingly, even that stock has rallied pretty hard today. Intraday it was up 10% and there are buy flows. But I understand a leading long-only fund has been an active buyer in Linde of late, and that's the reason why you're seeing a bit of selling exhaustion and the fact that some FIs have bought in the last couple of days in Linde, India. So that's the second stock. The third stock is ISJEC Heavy. If you look at the intraday chart, from an 850 low, it has almost bounced back to almost 925, 930. So sharp up move from the intraday lows today. There's a large block, 1.4% equity got changed hands. I understand the FI holder was a seller in today's block, and some domestic mutual funds, including an AIF, was an anchor investor. So the disclosures could be quite interesting in ISJEC's block today. So that's something to track there. And the last one is Suven Pharma. In the last couple of days, you've seen a big move in that name as well. The volumes are on the higher side. I understand some HNI investors have turned active buyers. Remember, the stocks saw a big correction in the recent sell-off. But yesterday, there was a Macquarie initiating report as well. And in general, you've seen a bit of action in the CDMO space. And Suven stands out on the back of HNI buying.
Okay, all right, Nimesh, got it. Thank you very much for all the buzz and all the action from the street today. With that, we'll move forward. The FTSE India March 2025 semi-annual review announcement is all set for tomorrow, with adjustments scheduled to take place on the 21st of March. Vivek is joining in with, as usual, the potential candidates who could go in, who could go out, and what the math is looking like right now. Vivek.
Well, that's right. This time around, expecting more inclusions. At this point of time, not penciling in any exclusions as far as the FTSE All World Index is concerned. Like you mentioned, tomorrow post-market hours is when you're expecting the list of candidates to actually come through, to be announced. Adjustments, like you mentioned, will be in March 31st. Which are the stocks that could make the cut this time around? Expectations are as IFL Capital, IFL Alt Desk, that is the expectation that we are penciling in. The key names, 361, that particular stock could come in. Blue Star, Fortis Healthcare, Apar Industries. Fortis Healthcare could see inflows of a little over $60 million if, in case it makes the cuts. CRISIL, Bajaj Housing Finance, the recent listing. BSC could see inflows of close to $76 million. Keynes Tech, Premier Energies, and IndusInd Bank. IndusInd Bank could see flows of close to $30 million. Almost 10 inclusion candidates is what IFL Capital is penciling in. It'll be interesting to see which are the stocks that finally make the cut as far as the FTSE All World Index is concerned.
Oh, okay, all right, got it. Thanks very much, Vivek, for that. Well, with that, let's welcome in Mayuresh Joshi to take us through the final lap, the last leg of the show today. Mayuresh, thanks for joining in. So what have you been doing and what have you been buying, if at all, in the mid caps and small caps? Clearly, the bargain hunters are now finally, they've managed to find the courage to get back on the street. What is your approach in the market right now?
Afternoon, Surbi. Yes, it's been a difficult time in the last few weeks. But I think we've analyzed a few data points and we've just put our note out. We actually did comparisons on 3-4 broad parameters. The first being the bond yield and the earnings yield. It probably seems that the gap that has now got formed is very close to historical gaps. And as that comes down to that historical gap, a large part of the expectations of markets bottoming out seems to be a plausible case. The other element that we probably studied over the last 10 to 15 years, 15% of the Nifty 500 stocks are trading above their 200-day moving average. The last that we had seen was in 2008, 2014, COVID crash in 2022. I think a similar scenario had played out where after a few weeks or few months, the markets actually bottomed out, and I think you saw a significant amount of enthusiasm coming back. The third obviously has been the dollar index, which obviously was capping out at 105, 106 odd levels. This time it's moved to 110. Now, if you look at the inverse relation, it probably tops out, which seems to be the case at this juncture because the dollar index has broken down on its 50 and 21 DMA. Seems to be a case that if this does happen the next few weeks or months, the market might actually bottom out. And last but not the least, I think in our own methodology, I think 22,725 becomes a very, very critical level. The low that we created in the recent past or the last few days. I think if that is defended, which seems to be the case, we've entered into a rally attempt. And if we do get a follow-through day, which is when the Nifty makes a move of 1.5% with good volumes, maybe the bottom is well and truly in place. So I think the construct sounds a little bit optimistic and positive with all the battering that we may see. But we have been cautious so far. But again, a few sectors are coming up. Agrochemicals as a space, a few hospital stocks are coming up as well. You're probably seeing some financials come up as well. We've added Coromandel, case in point, within the agro space into our model portfolios. Our take is that the rural season and the expectations of a good Rabi harvest, La Nina conditions, brewing, expectation of a good Kharif output expected with good monsoons that are expected, and a good Rabi season to follow, might mean rural will come back in a very significant way. The best stocks in terms of placement at this juncture seems to be agrochemical place and Coromandel in terms of our rating and ranking seem to be well placed here. The other elements that we're probably seeing at this juncture within financial stocks like a Karoot in the mid-cap space looks well placed. Earnings have been fine as we speak. Management commentary has been very, very optimistic. And therefore, I think as the advances growth happens reasonably, the capital adequacy remains extremely strong. Asset quality pressure is expected to come out even further in the next financial year. And the EPS rating and rankings, the RS rating and rankings seem to be on footing. A couple of stocks on our watch list, Surbi, as we speak. UBL, United Breweries, seem to be on our watch list. Last quarter, encouraging quarter in terms of volume growth. With what has happened in terms of the duty cuts on bourbon whiskies in the US, beer makers might actually stand to benefit in their opinion. With the summer season coming around, I think volume growth should substantially pick up. You've seen price hikes as well as state hikes are concerned. Input cost, ENA and molasses seem to be under control. And therefore, margin expansion probably seems to be a good case in point, reflecting better in terms of earnings growth as we speak. So I think a few sectors and stocks on it.
stock up on beer and on the beer stock ahead of the summer season. That seems to be the thought process. Maresh, hang on, we need to take a break. By the way, the market is so flat, Prashant. I was wondering whether there's something wrong with my screen. There's nothing moving. It's absolutely comatose. Nifty has been static with this 13, 14-point cut. I mean, there's hardly a blink on stocks, actually. Mid-cap market, obviously, is better off. But otherwise, it's an absolute dead sort of a market where... And maybe, you were talking about 7 stages of grief. Maybe this is the final stage, right? When this is it. You do nothing. Yeah. And that's the final stage. And then you rebound from there. I don't know, to go back to that example.
Yeah, I said disgust, right? That's the last... it's actually not... No, I'm saying, but I kind of modified that to force fit it into the market
into the current setup. Yeah.
But I mean, sometimes it's a powerful indicator. And I think it's gotten to some of those levels. But, it's a first bounce. So let's take it slowly and each day as it comes. Some amount of sort of stability is coming back, especially in the broader space, as we've been pointing out. Well, what we'll do is we'll just play out some sound bites for you. And this is, Samir and Chakrabarti of Citi and Chetan Iyer of Morgan Stanley talking about these tariffs from the US and how they'll impact, actually which industries and sectors they'll impact most here in India in the shape and form that is being currently suggested. Listen and take that break. We'll see you on the other side.
Our sense is that the current tariff gap is about 8% or so. And then you are on a bit of a guesswork on how much of these tariff increases, hypothetically, would be passed on as higher prices. But assuming full pass-through of these tariff increases, that this entire 8% increase gets translated into 8% higher prices, and then assuming some price elasticity of export estimates that we have from the past. Again, it's very obvious that not all sectors will have exactly the same price elasticity, so we are making sweeping assumptions here. But if you do that, then probably you end up with something like a $7 billion impact on our exports coming out of the tariffs being equalized at a very top level.
We are looking at now GST, because in the press release that the US administration released for reciprocal tariff discussion, they mentioned about VAT in different countries also being higher compared to the US. US does not have any VAT. So when you consider tariff rates, the fact that India has GST, which US does not have, and then the third thing that they are looking at is non-tariff barriers. So when you consider all the three factors, we think India will find it difficult relative to this whole reciprocal tariff issue that the US has raised.
Welcome back. So, like we've been saying, it's a very flat day for the large cap screen. Shriram Finance, by the way, will go home with a very decent gain, 4% higher on Shriram Finance. Just very quickly, on the large caps, Mayuresh, you named a couple of picks on the mid cap side. In the large cap arena, anything specifically that you like, financials or even otherwise?
Sure. So, Sulmi, I think Kotak Bank probably seems to be one stock that is probably making a base case scenario as far as our rating and rankings are concerned. Obviously, the numbers in the previous quarter have been decent enough, but the expectations in terms of the addition that is going to happen to its personal loan portfolio, I think how does that accrue in the next few quarters is going to be very, very interesting. The management sounds very, very hopeful in terms of the stability in their NIM performance, expectations in terms of their cost to income ratios remaining stable. And what you'll probably see in terms of deterioration in terms of CASAs, generally for the industry as a whole, should show some signs of improvement as we head into the next few quarters. So I think among the large caps, I think Kotak is something that probably remains on our radar as far as rating and rankings are concerned.
Kotak Bank remains on the radar. I got that. Anything you mentioned one UBL earlier. Anything else in the broader space which you have a view on, Mayuresh, which is lots of stuff rebounding, but some of them are just after 30-40% falls. You got to put this into the recoveries in that context. But anything else you like?
So something like, afternoon Prashant, I think something like Avanti Feeds also remains on our watch list. I think 2-3 reasons. One, I think if you probably look at their business construct itself, shrimp feeds, the EBIT performance has improved, not just quarter on quarter, year on year as well. As far as processed shrimp is concerned, the expectation in terms of the export markets and specifically the US context, the kind of tariffs that are levied on India compared to a Vietnam, a China, or even an Ecuador at this juncture, India stands relatively higher. So I think there are two perspectives here. If tariffs increase or they increase substantially for other countries as well, and they come at par, India was probably getting a little bit of a lesser share because of the competitive intensiveness of pricing as well as currency, which probably remains at par now. Ecuador shrimps have seen a huge amount of upheaval issues in the last few quarters. And therefore, I think there is some element of hope that even if this comes through, the hit in terms of margins might not happen. The second element in terms of their core strength in terms of input costs. So you could probably divide that in terms of fish meal, soya meal, and flour. Flour prices on the higher side. But generally, I think earnings rating rankings seem to be better placed for Avanti Feeds at this stage.
Okay, all right. Right on cue there, Mayuresh. Stay with us. We're just going to come back to you with more questions in a bit. But let me just quickly wrap out things. So it's a flat close, absolutely flat close on the Nifty, 25 points lower. Nifty Bank is more meaningful, about 300 points lower. That's a 0.5% cut on the Nifty Bank. But mid-cap index 1% and the small-cap index up a little bit more. So that's the overall picture. Market breadth solid, 2,000 stocks higher, 850 stocks lower. So yeah, I mean, 2.5:1 in terms of advances to decline ratio, and lots and lots of individual movers. Mahindra, of course, in terms of the Nifty, was the standout kind of turnaround name that we've had after 5 days of losing. M&M turned around about 3% higher by close. There was Shriram Finance, NTPC, BEL, Adani Ports, Trent, Hindalco. So you essentially had about 8 names on the Nifty with gains in excess of 2%. On the downside, Maruti was down 2%. There was that Car Industry Association yesterday essentially talking about very poor, at least in terms of expectation, very slow, flattish growth rates for FY26. Tech Mahindra and Tata Consumer were the other Nifty losers, at least. But it's all about individual names in the broader space which were shining. Surbhi.
Absolutely. I mean, from a sectoral standpoint, it's PSUs all the way. And I'll talk about those stocks in just a bit. But financials have really stood out in their underperformance today, whether it's, large banks, mid-sized banks, PSU, private sector, largely private sector, actually. PSU banks relatively better off, which brings me to the PSU charge. Bank of India, 5%, SJVN, 4%, REC, 3.5%, SAIL, NMDC. You get the drift, NALCO, PNB, large volumes and a fair amount of gain on these stocks. But beyond PSUs as well, the market was fairly vibrant today. Look at Piramal Pharma, 9%, Amara Raja, 7%. NetWeb has had a good pullback today, 9% on the higher side. And a couple of stocks from the industrial space, Voltam Transformers, 12%, Azad Engineering 7.5%. So pretty good. And some of the defense names as well, like MTAR Tech, a much smaller stock, but nonetheless flying about 14 to 15% higher. So the mid-cap recovery continued in a pretty steady fashion. And the bulls will hope they can end the week along similar lines with this recovery continuing to build. Well, that's where we have to take your leave on this edition of Closing Bell. Many thanks for watching, but don't go anywhere because we have Markets Forward coming up next.